Hello and welcome to the CNBC Africa special. I'm Fifi Peters. Now, last week, Standard Bank announced that it was doing away with its dual CEO structure. It said that Sim Tshabalala would now lead the bank alone. I caught up with Sim and asked him how he was feeling about the appointment. We discussed a strategy, their plans for the rest of Africa, and their relationship with audit firm KPMG. Let's take a look. Sim, thanks so much for your time.
My pleasure,
Now,
Fifi.
your appointment as the sole CEO of Standard Bank was welcomed by many branches, and it's been celebrated as a black excellence as you become the first sole CEO of South Africa's largest bank. So how does that feel?
Fifi, it's a lot of interesting and mixed feelings. The one is one of terror because the responsibility is just so big. And then the other one is just that deep sense of humility as a consequence of so many people having so many good things to say about the appointment. And in that sense, it's been very humbling.
So it's only a couple of days since the announcement was made. How's the job so far?
Nothing's changed in that, the diary remains the same. The same meetings are having to be attended to. The same big issues are having to be confronted. But we entering sort of the, deep into the second half of the year. We're racing towards the end of the year, and we've got targets to meet. So there's a lot of work to be done.
Now, media reports, or Standard Bank has come onto media saying that the reason to drop the dual structure is because the bank is a lot more simpler than it was in 2013. So help us understand exactly what has made it simpler, and also why wasn't this announced a couple of weeks ago at your results presentation that this is the direction that the bank was wanting to take?
When we made the decision to do the joint arrangement 4 years ago, the principles driving that decision were, one, we were in advanced stages of completing our exit from a whole plethora of countries, including our businesses in Turkey, in Russia, in Brazil. We're reducing our business, the size of our business in the United Kingdom, trying to decide and complete the sale of that transaction to the ICBC. And there was a lot to be done. We're completing the IT project. We were driving one of the largest IT implementations on the continent, replacing our core banking system with SAP in South Africa and Finacle in our 19 businesses outside South Africa. We were in deep competitive situations in several of our operations outside South Africa, in particular the Nigerian operations. And so the task required a great deal of attention and travel in a manner unusual to what one would expect in a normal business. It could have been done by a single person, but it would have been impractical, to deal with a PRA in London and then go and deal with authorities in Argentina, deal with issues in Nigeria, deal with Singapore, deal with Hong Kong, deal with Beijing. And when the proposition was made, it made sense to agree to it. Now the business is still a large one. We still employ 54,000 people. We still have assets of close to 2 trillion rand. We've got loans and advances of just shy of R1 trillion. We are in 20 countries on the continent and a number of others outside the African continent. So it's still a large business, but a lot of the tasks that faced us in 2013 are all but complete.
And exactly how was that decision made? Because it seems it was very immediate.
It was immediate in the announcement, but it was a long time in coming. In that from the moment the decision was taken to do the joint CEO arrangement, the executive was in constant discussion about what is the best way to configure the architecture of the group, the team, and how to compete. And we're executives, so we have to think about the configuration of our leadership, the knowledge, skill, and talent, and how it's constituted at the top of the organization. What skills do we need? Do we need more IT skills? Do we need more financial skills? Do we need more marketing skills, and so forth? So it was a constant discussion. It wasn't like we woke up all of a sudden and said, all right, now is the time to make this call. Indeed, you will have seen that the board made reference to succession. Succession is a constant activity. It doesn't happen once a year. And hence, once the call was made, all the actions necessary to execute the call were already in train.
And I've read that it was Ben who chose to step down. Is this true?
It is entirely true. It was led by Ben, and the recommendation was made by him.
And what's he doing now?
Much the same as he was doing prior to this. And again, running a large financial institution like this is a constant activity of deciding on how to utilize your capital, thinking about your risks, what you do about your systems, what you do about your IT. So it's not like, there's a cliff and things stop happening. The activity that led you to this point continues. We still have to worry about, this morning we're talking about our business in Tanzania. The meeting prior to the one I've just had with you, we're sitting thinking about our operations in Tanzania. This afternoon we're thinking about our operations in Malawi. That work continues. That meeting has been in the diary for months. And so I use those two examples to illustrate the point that it's a dialectical and continuous process. It's not as if roles all of a sudden stop and new ones commence.
I have to ask, was there pressure from what's happening in terms of government's rhetoric that the financial sector isn't transformed enough? Was there pressure for Ben to step down because of that increased rhetoric from the government regarding transformation?
If the proposition is that the proximate cause for the change was government pressure, the answer is no. Mm-hmm. If the question is that this is in response to the competitive posture of Standard Bank and what it needs to compete into the next decade, the next 20, 30 years, and in response to that competitive environment, you look at all the factors that drive the competitive environment, the answer is yes. It's just one of the factors you take into account in deciding what your company needs in order to be competitive. And the society and business dialectic is a continuous one. Criticism of Standard Bank is not going to stop. It's going to continue. Standard Bank is a large organization. It's a big brand. Nothing that we do goes unnoticed. And so whatever decisions we take, good or bad, are going to be criticized. So the fact that this decision's been taken, it's going to be criticized. The fact that we make a different decision, we're going to get criticized. It's just the nature of the beast.
All right, Sim, so now that you're going at it alone, what do you plan on doing differently?
Nothing. I plan to continue on the trajectory that this great institution has been on, which is to continue to meet our purpose. Our purpose is Africa is our home, we drive our growth. We're at the center of many of the economies where we operate. We take deposits, we advance loans, we facilitate savings, we give people insurance products. We've got to continue doing that. There are many incumbent banks that compete with us, and there are many new entrants. There are many fintechs that are trying to stand between us and our customers. We have to fight tooth and nail to preserve the customer relationship, to improve the customer experience, introduce new products, acquire new customers, because a bank grows on the basis of banking penetration, as you would know.
And then how would you like that success to be measured?
By return on equity. The ultimate test of the success or failure of a financial institution or a business in general is return on capital. So all the factors that go into it, whether it be how well are you responding to the country environment, how well are you responding to your competitive environment, how well are you responding to your customers, how well are you responding to the demands of society, shows up in the cost of capital. And so you've got to beat the cost of capital. And therefore, the way you measure that is return on equity.
Now let's bring it back to transformation. So in terms of transformation at board and executive level, how are you planning to accelerate this at Standard Bank?
We have to keep looking for the best qualified, the most competitive, and the most successful black executives, women, disabled people, and Africans in order for us to reflect the demographics of South Africa and the demographics of the continent. And here I'm making reference to Section 13 of the Employment Equity Act, which says that designated employers such as ourselves have to have programs in place that accelerate the development of designated people. By the same token, Section 15 says that you can't have an unfair crimp, unfair negative impact on the development of people who are not minorities. I mean, people who are white people. And so you've got to take actions that improve the representation of black people, but preserve the skills and the aspirations of white people. You've got to do both. And so in the case of Standard Bank, we're not satisfied with our demographics. We're going to keep working harder to improve demographic representation. And the reason we're going to do it is because it's going to make us more competitive.
And over what time frame are you planning to sort of improve your transformation credentials?
It differs by category, but in a sentence, as soon as is reasonably practical.
In terms of transformation at lending level, because it goes beyond your board and executive level, so there's been a number of complaints from black-owned and black female-owned businesses that lending for them is too hard. Now, we have seen that lending by most banks has increased, or rather reduced, because of what's happening in the economy. But how are you planning to improve access to finance for black-owned businesses?
Fifi, it's a number of different things, and there's no silver bullet. I mean, at a fundamental level, what factors go into a lending decision? It's one, it's the character of the borrower. Secondly, it's their cash flows. Do they have cash flows that will support the borrowing? And thirdly, it's their capital, their capital structure. The tragedy of South Africa is that the majority of people have not had access to income and have not had access to assets, and therefore it's not really rational to be saying that the only basis on which you're going to lend to them is that they need to have capital. They haven't had, for example, parents leaving to them pension funds that provide them with equity and capital. It's just a structural problem we've got in South Africa. There are many solutions to that, and we're working on them with various partners, including with government, where you say to people who have got access to those funds that they should provide them as a source of equity for people that don't have access to equity. And there are many types of joint ventures you can enter into to give effect to that. And so you innovate, and we are working hard to find innovative solutions that solve the problem. The other one, of course, is the implicit criticism that credit decisions are racist. We're working hard to make sure that we don't have unconscious biases in our teams. And obviously one of the ways of doing that is making sure that your teams are diverse, that your teams are transformed, and people are not making unfair decisions without being aware that those decisions are unfair. We're constantly reviewing the numbers and pushing ourselves to find innovative solutions. In a sentence, we are in full support of the notion, for example, of the need for a black industrialist cohort in South Africa. It is important. You need people who have got their hands on the levers of these businesses and industries, are running them themselves, and they need to be in larger numbers, and they need to be black people.
Well, let's take a short break. We'll be back right after this. Welcome back. Now, ratings agency Moodys was recently in town. They said they expect the profits of the top 4 banks to be lower in the next 12 months. And that's because the economy finds itself in a tough spot. I asked Sim about this and asked how Standard Bank would weather the really difficult storm. But overall, lending by the industry is falling. The economy being cited as the main factor. So what
it is the exclusive factor. So the fact of the matter is, banking is a derived industry in the sense that our activity is driven by activity in the economy. So if people are not purchasing assets, they're not investing, they're not buying homes, they're not buying cars, we can't drive that, if you follow what I mean, because we lend on the basis of the demand that people have for borrowing.
So then how do we make the economy better in Sim Tshabalala's view?
In my view, we are working hard with business, in partnership with government, organs of civil society and the labor movement, to find solutions to some of the big challenges that face us. I mean, the main reason why people are not borrowing, and the main reason why there isn't as much investment as there ought to be, is the lack of consumer and business confidence. There are many technical reasons for it, but you will have seen writings by many economists which go to the heart of it. It's as a consequence of the tough political situation that our country finds itself in. That's solely and exclusively attributable to the noise in the political arena in South Africa.
Mm-hmm. And what do you make of the statements that capital is on a strike? And because of the strike that white capital is on, I mean, getting this economy off its feet is going to be near impossible.
That statement is not a true statement of fact and is not consistent with the evidence and the facts. There is no such strike. It's not true that people are sitting on mountains of cash that is not deployed. The percentage of cash holdings and investment by South African corporates is commensurate with what happens elsewhere in the world. The real issue in South Africa is that there are structural impediments to the country's economy, and we are all addressing them in our own ways, but it's mainly structural factors that contribute to this. So in other words, it's just not a true statement of fact. It's not correct.
It's not a true statement of fact. And Sim, going back to
false, in other words.
It's false. Going back to your results presentation a couple of weeks ago, you said, quote, that you foresee January 2018 being a lot rosier for the South African economy than the conditions that we're currently experiencing now. Can you elaborate as to exactly why you're seeing such an optimistic view for us next year?
I think by then, if the trends that are currently on the go continue, there will have been some form of political resolution pursuant to the ruling party's December elections. Whatever the outcome is, whatever the scenarios will be, there will be more certainty. What we require for investor confidence to improve is certainty and direction. And so, as I say, regardless of what the outcome is going to be, there will at least be a greater certainty than the period leading up to the December conference. Now that may be wrong. Things may turn out differently, but the natural laws that apply to politics would suggest that the ruling party will make up its mind and there'll be more clarity.
So Moodys was in town last week and they issued a report on the outlook for South African banks. And they believe that South African banks will experience lower profits, and they see a slight uptick in bad debts from consumers. Do you agree with this view?
I agree with it. We're seeing those trends. Bad debts are slowly ticking up. As the economy continues to grind slowly, you will see those trends. The reason why you will have seen a counter-cyclical type of outcome arising from Standard Bank in the half-year results is as a consequence of our operations outside South Africa. They are growing significantly faster than the South African operations because of faster GDP and faster banking penetration in those countries.
So let's talk about those countries, because media reports have it that you intend on increasing hiring in the rest of Africa, sourcing from a local talent for your top jobs. Has this started?
It's a process that has been continuing. So our head of the African operations outside South Africa is Shola David Bora. She used to be our CEO in Nigeria. There is incredible talent in our operations outside South Africa, and we intend to make use of that talent. I think that quote may have suggested that that was going to be a foil for transformation, which was a sort of an unfortunate emphasis. We are going to continue the transformation program in South Africa, but at the same time, being an African institution, we have to have more Africans represented in the top echelons of the group.
And where do you anticipate to see sort of the most hiring in the rest of Africa in terms of your operations?
It's going to reflect the activity in each of those jurisdictions. So take Nigeria. The Nigerian operations are the biggest contributors to leadership in our group outside South Africa, and that reflects the size of those operations, and it reflects the quality of the Nigerian cohort.
Now, Sim, at least 30% of the bank's profits come from your African operations, as your previous results have shown. Will there be increased focus in bringing in your fintech and your blockchain solutions there?
And that's the point. So I was saying that we are spending huge amounts of money. As you're aware, we've got over 20 billion rand on the intangible asset which is capitalized IT. And the idea is to make us as nimble as possible in the competitive arena against, as I say, the existing banks, the new entrants, and the fintechs. And that proposition applies as much in South Africa as it does in our operations outside South Africa.
On to the matter of KPMG, the big story currently now. So when I spoke with Ben a couple of weeks ago and I asked him if you would be looking to review this relationship with KPMG, he had said that he was waiting for the investigation to reveal whether KPMG was guilty or not of what it was being accused of. So following the report that was released on Friday by KPMG International and the subsequent events, what's Standard Bank's position regarding its relationship with KPMG as an audit?
Fifi, we expect people to apply principles of natural justice to us. If we're accused of wrongdoing, we expect formal processes that investigate that wrongdoing. We expect to be given an opportunity to respond to that wrongdoing of which we are accused, and we expect our counterparties or people we deal with to make decisions once they've reviewed all the evidence that is brought before them, and we expect them to give us an opportunity to make our case. That process in respect of KPMG is not complete.
All right, so at this stage, you're not looking to review your relationship with...
We're reviewing all the facts before us. We're reviewing all the evidence that was shown to us on Friday. And we will apply our minds, and at the appropriate times we'll make the appropriate announcements. In other words, our decision will not be announced to KPMG via this interview.
Right. So you're not going to give me a breaking story?
No, I wouldn't dare do that.
All right, okay, understood. But many say, Sim, that KPMG also alludes to a much bigger issue here in South Africa, you know, that relationship between politics and business and corruption. So as a corporate leader yourself, what role do you envision Standard Bank playing in this fight against corruption?
So we're members of BLSA, and we're active members of that organization. BLSA has a constitution which speaks quite eloquently about what business's role is in society, and it also has just issued a pledge in respect of its role in society, and in particular in respect of corruption. In turn, Standard Bank itself has got a code of ethics, and it's got 8 values which make it inappropriate for us to contemplate either corruption or illegal activities. We subject ourselves to both that internal set of principles and those of BLSA. Where it applies internally, we act when we come across corrupt or unethical conduct, and where our counterparts or suppliers or people we do business with, when they're accused of, when there's a fact in the public domain about inappropriate conduct, we go through, as I say, principles of natural justice, and we make up our minds in a formal and professional way. And we are going to continue to do that. There are a number of these matters that are in the public domain, in addition to KPMG, and in each case we're working systematically through them. I might just add that we are also accused of collusion there, but
are you referring to the forex rigging case?
The forex rigging case. And if you read the public discourse, people are suggesting that we are guilty long before the process has been concluded. Would expect, in our case, principles of natural justice to be applied. And because we expect that for ourselves, we should be seen to be doing the same to our counterparties, is the point that I'm making. We must go to where the facts and where the law takes us.
So are you saying that Standard Bank is not guilty of collusion in the forex rigging case?
We're absolutely certain that we're not. And there is no evidence that that's the case. And if there is such evidence, we will act upon it.
Because I understand that at the Competition Tribunal now your case is being heard. You are asking for more information from the Competition Commission.
So in law, we're entitled to the authority's case file, and we have requested it in order to be able to determine whether or not the accusations have veracity. And that file has not been forthcoming, which is what is being heard even as we speak.
So this is not a stalling tactic by Standard Bank?
You see, that's the point. We believe in the rule of law. You and I would argue that we believe in the rule of law. And in terms of South African law as we understand it, in the case of competition law, we're entitled to the file. And here's the point. We've made this point consistently. We've done investigations, extensive investigations, and none of our traders and salespeople have perpetrated any forex collusion. We've made this known to the authorities. We are in a process through the Competition Tribunal where we are answering those allegations. But in terms of South African law, we're also entitled to the case file, as I was saying. And it may well be that in that case file, there is that damning evidence, in which case we're guilty, in which case we will take our medicine. But the point is, there is no such evidence. South African law does permit us to make this request, and we are proceeding firmly within the four corners of South African law to request it. So the point is, and I have to say this, if our traders and our staff have been involved in unethical or illegal activity, we must act upon it.
Mm-hmm. So will you fire them?
We will throw the book at them if they are guilty. As we have in other instances, you're aware of the situation we had in Tanzania. In fact, in that case, we self-reported. Not only did we throw the book at people, we cleaned out the entire top echelons of our business and started afresh, effectively.